Okay, here we are again. Jerome Scott, the insurance guy, doing the podcast. And I've had some responses from individuals out there in podcast land that want me to discuss some things that have been on their mind. And I'll give you a kind of a dose of some things that I've been asked to talk about. Let me get here. Ways to cut costs without sacrificing quality. Tips to stay financially healthy without sacrificing what you want. Ways to avoid sacrificing your financial future. How Generation Z can retire with $1 million. You know, these are all great questions, and I wish I knew the answer. No, there are some things that you can do, honestly, to take care of that. Talk about low-risk accounts. Here's something that someone's been reading, and I don't mind sharing this, but again, Warren Buffett, 10 things poor people waste their money on. And you might be saying to yourself, I want to hear that one first. Well, the first thing that you're doing, if you're a poor person, you're spending money. Keep it in your pocket. So you need to do that. But today, again, I shouldn't say today, I thought we would talk about long-term care. That is a benefit, a type of coverage that we need, and perhaps you're already providing it to someone and don't realize it. And how's that? Well, we're in a situation now where we're caring for our parents, and therefore that's one generation. And then we have the kids. We thought the kids were gone, but guess what? They're back. They're back in the home. So we've got the kids back. So, and then we're caught in the middle, in the sense that ergo the terminology sandwich generation. And how do we get ahead? How do we even stay where we need to stay if we're providing benefits to other individuals that are a part of our family, but not a part of the family? But again, those are things that we really need to look at. So let's talk about and get into long-term care. Now, a number of people think that, and you really have to put quotations on there where we say think. Well, you don't need to be thinking. The point is you need to know. And Medicare does not provide anything as it relates to long-term care. That's a misnomer. A lot of people think that's the case, but it's not the case. And sometimes we find out that that's the case at the last minute. We find out that a parent needs care, and we think that they can get something from the government, and actually that's not going to occur. But let's talk about, now we know 43% thereabouts of all long-term care claims are for individuals under, I preface this by saying under 65. That's a staggering amount of people out there that need long-term care. Things come up, things happen. Again, now here's another statistic. 60% of all Americans aged 65 and over will require care in a nursing home sometime during their lifetime. Sometime. And that's something that we need to think about because, again, things happen. So with that being said, then we get into how much is long-term care going to cost. Well, it's a good question. And again, it's more money than we will ever have. Long-term care is inexpensive. Think about the nurse practitioner or the nurse that comes in to take care of mom and dad or someone that you love on a day-to-day basis. They're there for 8 hours. There's an hourly rate. And all you have to do is really call up providers and get the cost. In fact, that's what you need to be doing, because you need to find out, again, what's the dollar amount that you would like to see or have as it relates to long-term care. Everybody wants to know about cost. All we can do is talk in generalities. But I was using $130 a day for a benefit. And one thing that you could find out, or should find out, is to look at some facilities that are close to you and find out what the benefit period or benefit amount would be for the area. And that's going to help you make a decision. Now, that does not mean that you have to go with that. Again, when I do assist individuals, I ask them, again, look at the affordability. And then I build a program based on that. And I can think of one individual that I built a program for, and it was at $50 a day. Now, obviously, that doesn't do much to make a dent in long-term care benefits. But I'm here, and this individual lived in Eastover, if you will. And I received a call from this lady a while back. She had the policy for some time, and she was calling to thank me for at least providing or getting a long-term care policy for her husband. Well, first of all, that was the only thing that she could afford at that particular time. But she was thanking me. At least she said, at least it's doing something for our budget, if you will. So, I mean, it's good to hear that, but it would have been great if the affordability was at $100 or even $150 a day. But she had a policy that was $50 a day to take care of needs, if you will. And let's break this down a little bit further to kind of help you. Not everyone, one of the things that I hear quite a bit, Jerome, I don't want to go into a facility. Well, that no one wants to go into a facility. You know, all of us want to stay at home. However, you can have a plan that will just pay a benefit at home. So that kind of, number one, when you do that, that will ease the premium payment. It will, pump the brakes. So that's something that you might certainly, that should be offered. It can be offered. So you can certainly obtain a long-term care facility that will just pay while you are in a facility. You can get a long-term care that will just pay for while you're at home only. And then, of course, you get the Cadillac plan. Those of you that like Cadillac, you can get one that will pay at home and also in a long-term care facility. So there are three ways that you can go, and of course, the price point is different in each benefit period. So then, with that being said, also you can also have a design for the long-term care as far as how long will that benefit go. Do you want it to go for 6 months, 1 year, 2 years, 5 years, or indefinitely? Of course, the price point is different from a policy that just will pay for 1 year versus a policy that will go for 5 years only. And I know what you're saying out there. You want something that will go forever. Well, if your money will go forever, we can make it happen. But again, there are so many things that you can choose from in a long-term care to make it right for you. Now, certainly, can you make changes down the road in the long-term care policy? Well, you can do that. However, you cannot do that when you're in the mix of a claim. And that's oftentimes when people want to make changes, when they're in the midst of a claim. And that's, again, when you get into something like this, you want to make sure, number one, it's going to fit you. You want to make sure that it's going to provide the kind of care that you need if you go into a facility. But probably most importantly, you want to make sure that you're allocating the funds that are going to fit your budget. And that's awfully important. You don't want to start allocating funds and then, oops, we have those oops moments where you should have said, well, I really can't afford this. I need to step down. And so look at that seriously when you're looking at the long-term care. And certainly the benefit period goes into it. And also you need to look at the elimination period. I've got clients that have long-term care policies, and their waiting period before the benefit kicks in, I've got one client whose benefit period doesn't kick in until after 5 years. And I know you're shaking your head. Well, this person can go 5 years without having to have another party, in other words, the insurance company, step in. He thinks that he can take care of himself for 5 years without another entity coming in. And when he gets to that point, they can come in and start paying. Of course, the longer the waiting period, it's like a deductible. That's how you have to look at it. It's a deductible. So those are some things that you, again, how you build this program for yourself is going to make a difference as far as what that premium will go up to, or should I say, that you can handle. So those are some things you tend to look at. The other thing that I believe is important to know is that you just don't get long-term care and think it's going to start paying immediately. Of course, there's a waiting period, but again, it doesn't start immediately. You have to meet daily activities that you cannot perform before the benefit kicks in. And there are 6. They're not 5, they're not 4, there's not 3. You have to meet 6 daily activities before the benefit will kick in. And one of them is dressing, being able to dress yourself, toiletry, the ability to move in and out of bed. Pardon me, there's somebody calling about long-term care already. We're going to do that. All right.
Good, go ahead.
We're good?
Yeah.
All right.
If you watch it, you can say, give me a quick second to get ready for how do we want to say it.
All right.
For Jerome, like to break, talk about the age, because most people, what age should they start investing in long-term care?
Okay. Okay. Am I still running? Is this still? Oh, okay. You're going to edit this. Okay, good.
I'm going to edit this out. You're fine.
Well, again, there was a question. Oh, let me finish that. The 6 activities of daily living that you perform that long-term care is either going to make you or break you. Bathing, dressing, toiletry, the ability to move in and out of the bed, chair or wheelchair, eating, and continence. These functions must be renewed on at least annually for the company, and it's and every company goes through this. It has to be updated at least once every 12 months. Now, I've been asked about when we should look at long-term care. Well, it's like anything else. The younger you are, the cheaper, the less expensive whatever word you want to use, it will be for you. I'm thinking now that probably the youngest person I have marketed a long-term care policy, they were in their late 30s or early 40s. We tend to recommend those individuals when they get in their 50s, 55, 60, definitely 60, late 60s, to look at a long-term care policy. You can't purchase them if you're already in a medical situation, but again, most people purchase them between 60 and 65, and sometimes older. But how do you want to protect your assets? Now, let me go back to the individual, that young individual that I marketed a long-term care policy to. They were involved in a situation which made it easy for me to talk to. They were providing care for their parents. They were stressed out. And they knew there was something out there that could help them ease the burden. And somehow I was referred to, and we were able to strike up a relationship. I was able to certainly go over the benefits and the different things that needed and what the long-term care provided. And they were open. In fact, individuals that I speak to, that I somehow run into, the people that are easiest to talk to are those individuals that are caring for someone else. I'm not saying it could be mom, dad, an aunt, an uncle. It's just someone that they're caring for. So they realize that having a long-term care benefit is going to assist them mentally and also physically. And again, what do you mean by physically? Well, when you're taking care of a person that has chronic care needed, and they have to go to the doctors, you have to, in some cases, lift them up, cart them here, cart them there. There's so many things that anything that you do, they have to do, and that falls on you. And you say it for what it is. It's a burden. It's really a burden. Now, I know you're going to say you love it, but wouldn't it be a lot easier for you to actually help that next generation out, that if you were already insured with this, and your kids would not have to be bothered? How many of us today have our parents live in another state? Even if it's just one state over, that's going to take some time out of your day to travel and actually take care of their needs. And then you're communicating over the phone about this, that, and the other. So you need something there to kind of lighten the load, not just physically, but mentally. Mentally, this is where the rubber meets the road, because you can just go bonkers if you do not have some things to kind of shore things up for you and also your family. So those are some things that you really need to look at. I'm reminded today when I look at some things, and I look at some things really on social media every now and then. I'm not a social media person, but you run into things that people are doing out there. They're on this big vacation. And the first thing that hits my mind is I'm thinking, did they save for retirement? Are they spending their retirement money? Are they spending the money that they could be using for themselves? I'm not saying not to do it, but I said you really have to put some. How are you doing this? I know what people want to do. They want to make the money, and then the next day they want to spend the money. That may not be the best thing to do. Okay, there's somebody disagreeing with my statement there, and that's okay. Boy, I didn't know I was going to set this off so much, but it happens. I tell you what, that person can certainly call me after the show, and then he can bless me out. But certainly, tend to look at that. As I said, I'm not one on social media, but when I see these individuals going here and going there, and I'm thinking, oh, there's that money's gone. You can't get it back. You can't get it back. And you can say, well, you can get it back. Well, it's not going to add up the way it should, even if you got it back. So don't think you can recover it. Once it's gone, it is gone. I have a thought now where I had an individual. I'm doing something for him as it relates to retirement. And to be quite frank with you, the guy is going to be rated. He's now on all kinds of medication. A little overweight. There's a lot of things going on there. Now, can something be done? Yes, something can be done. But it could have been done better at a lower cost if he had not had all these things going through the years of eating the pork and just having fun. Nothing wrong with fun, but again, the idea of being responsible. And this not only affects him, but it affects the family, because there's money going out that should not be going out because you had a good time for this period in your life. In fact, he even said that to me. He says, there were some things that I did that I shouldn't have done, and I had a great time, but I really should have cut it in half. And I don't know. He said it, and so all I could do, he was saying some things that could have come from me. In fact, what happened was I said, I agree with you. So at any rate, so we had to pick up at that point and go on. And that's important. But again, we tend to look at that. Now, I want to pivot back to this long-term care and how we can certainly get into that. And one thing that you need to do or should consider doing is go on a quest. Call some long-term care facilities in your county and find out what it's going to take to provide care and actually to get in. Because not every long-term care facility has room. You may have to, that's the other thing that I can bring up that needs to be said. If you go the government way, if you will, if I can say that way, you're going to be placed anywhere. If you have a long-term care policy, you decide where you want to go, and so that's important from that standpoint. So, and I know those of you out there probably know individuals that do qualify and have qualified for some type of government long-term care. And it is government because you have to spend down. You can't have any money. You cannot have any money, and they actually check all accounts. And there is a ruling out now that, and it just didn't come out, but you can certainly give away your assets, but they must be gone by the 5th year. So you could not have anything in the last 5 years. So to think that you can escape the government's hands about how you might qualify for different benefits in this regard, it must be out of your hands at least 5 years prior to you going in and applying, if you will. So those are some things that we tend to look at. Who should consider buying long-term care? Well, those individuals that don't want to burden their children or family. That's an interesting statement there, because there's some situations where once the family knows that you're in need of benefits and care, all of a sudden they move to another state. No, I'm kidding. No, they may not. They'll move to another county. No, they won't do that. They may move out of the house, but no, you don't want to burden the family. But those individuals that want to protect their assets, in other words, what I said earlier was that you do not want to spend all your money. You want to avoid getting Medicaid. You don't want, of course, that would be something. And this is the big one here. You want to avoid, or actually not avoid, but you want to have peace of mind. Having peace of mind is worth its weight in gold. So that's important. And another big one here is that having the long-term care, you want to control your care. Because if you go somewhere else, you have absolutely no control. And here's something that the last one I can say is that you want to have control of your independence. And that's worth a lot. Again, you don't want to be a burden. You want to protect your assets. You want to avoid going on Medicaid. You want to have a peace of mind, and you want to have control of your care, or you want to maintain your independence. And again, as I said, this will certainly help you make your decision about investigating, hopefully, long-term care and what it can do for you and how it can fulfill your portfolio, so forth. So those are some things that are important for you as an individual. So, and of course, the biggie is, as I say, is the affordability. What are you trying to do? So investigate those facilities that say they have long-term, and some of them don't have long-term care facilities. They say they do, but we find that all they do is have you in a room and they check your vitals every so often. And that's not long-term care. That's not long-term care. That could be considered short-term care because you're not going to live long. But that's another funny thing there, but at any rate. Now, the other thing that goes with this to a large degree is that there are life insurance policies that have long-term care benefits inside. Just leave it to the insurance company to find out how they can make $1, and this is one way they can. Because before, as you know, life insurance was just for individuals that wanted to provide benefit to the one that they leave behind. But now this is another benefit, if you will, that you can actually, not all companies do it, but there are companies that will have a long-term care benefit attachment to their life insurance. And I need to kind of just also say that there are life insurance policies that have a retirement benefit inside that an individual can use. So you can see how your choices, you have a lot of choices, you have a lot of options. So you need to have something that fits you. And there's I know when I sit down with clients, I try to find out, let's talk about your family history. Of course, the thought here is, why is that important? Well, there's some things in your history that may or may not help make a decision, or actually maybe not the decision, but provide some insight as to a direction you need to go, as relates to that. So I know in my case, from a personal perspective, both my parents passed because of a heart attack. And because of that, I'm not saying I have to watch myself, but the thought here is, let's face it, I could be doing a podcast and keel over, and we know what it is. That was from my parents. Now, everyone's got some things, again, and you're probably saying, you rebuked that. Well, you go ahead and rebuke it, but the point is, things happen. And I go through this every year, things come up, and, but at least I'm aware. How many things are you aware of that may assist you making the right decision? That I know that can't be my mom or dad. So at any rate, the calls just keep coming. The calls keep coming. But at any rate, so I wanted to hit that today for you a little bit, and hopefully that will help. I wanted to also say to you, I've been told by the staff that this information is on, it's a podcast, so it's going to be on, I understand, I've got somebody that put it on YouTube for me, and that's a plus. So it's on YouTube. I'm excited about that. I haven't looked at it, but I understand that's where it is. So you can look at this again and again and again and again. So I appreciate that. Let's talk a little bit about, again, how I got this to come about. We were initially talking about life coverage. And again, we know that life insurance protects families from financial ruin. And we do not need to be purchasing life insurance. Well, I don't want to stop it there, but just to take care of burial. I want you out there to think of life insurance doing more than just protecting a burial plot. There are things that we can do with life insurance that are overwhelming, and I've seen it done for individuals. And it's not uncommon that I talk to someone and he says, Jerome, I don't have any relatives. They're all deceased. Or I don't care about them. I can come up with all kinds of reasons here. But again, I ask individuals to think about that. I had one young lady that was committed to being single. And I met her years ago, and she was came out of a very great family, she was making all kinds of money, and a youngster. She's about 24, and she was doing things. This was years ago. I'm never getting married, and again, she decided to just get a policy. At least I convinced her to do that, and to take care of final expenses. Several years later, and when I say several, it must have been between 10, 13 years later, I get an invitation to the wedding. And so that was nice that she invited me, but I couldn't help but jigger her a little bit, because when I went to congratulate her, I said, are you glad you got that policy? And I guess you need more now. And she said, Jerome, that's just like you to say something like that. And it was just like me to say it. And guess what? I made a sale. I had to wait. I did have to wait till they got back from their honeymoon, but I made the sale. At any rate, so those are some things. So you never say never. But it protects the families from ruin. Life insurance steps in the picture with money after something bad happens. Life insurance is there when something bad happens. That check is coming. That you know it. And most of us, unfortunately, when that occurs, that's really the first call that's made to me. Jerome, something's happened, and what's the procedure? That sort of thing. And I help individuals do that. But again, life insurance is it shows up when everybody else, unfortunately, runs away. They're not running away purposely, but most people don't know what to say. They don't know what to do. Again, I can assist you with that, and that's important. Life insurance really helps you to remain and really helps the family remain in their world. You know, no one wants to be in a situation where they have to do some recalculations about where they're going to live, how they're going to pay the groceries, how's the electric going to be paid. No one wants to be in that kind of position. You want to have something that you can look back on and make sure, and it's there so that you can say, at least I've got some breathing room. There's nothing wrong with that, you know. And just having the breathing room will help you get through the day, that week, that month, that year, and that's just something that's very, very important for you and the family. I can't say enough about making sure that there's some consistency with the family when you have life insurance, you know. And of course, and if you've purchased that policy some time ago, you're going to find that it's going to help you, especially if it's a dividend providing policy. It can provide a cushion for you to either open a business, provide some things for that individual, that son or daughter that's getting married, that extra gift. Those are some things that you can and it may help you do some things over a troubled period in your life to pull out some dividends. Now, dividends you do not have to pay back. This is your money. So again, those are some things that you can certainly look at and consider because life insurance doesn't just work when you're dead. It can work for you while you're living. So those are some things that we look at. So those are some things again that we want to talk about. Today we talked about long-term care, a little bit about life insurance, and one thing that we want to get back into when we say about life insurance, different types of life insurance. You could look at term, and it's for a period of time. It's kind of interesting talking to folk. What's term do? I mean, as far as, it will pay. But again, you have to know if it's a 10-year term, it will only last 10 years. You have to die within those 10 years. And if you can come up with the time period when you're going to die, then you know what kind of term you're going to get, whether it be 10 years, 15 years, 20 years. Again, but those policies really are noted for and best for individuals that have things that they want to cover within that period of time, whether it be a house, you made a big purchase for that speedboat and you know it's going to be paid off in 7 years. You can get a term policy that will just last that length of time. But again, for specific reasons, if you will. And they're mainly used for, not mainly, but certainly business owners that want to work together and have worked together and make sure that business is paid for if one of them dies during that period, if you will. And therefore, you can carry on. They can hire personnel or a person to take care of that business owner's need at that particular time. So it's a matter of sitting down with the representative, the person that you have confidence in. And that just made me think a little bit about when do you look at your program? I don't know why people think they can just get a program and just have it for 1 year. In other words, they sit down, they do it, and it's just 1 year they do it. If you go to the doctor once a year for a checkup to see how you're doing, and you have done this 5, 10, 50, the doctor can catch different things that are occurring in your life that's going to help you extend your life. You go to the dentist every 6 months, same thing. Your teeth can last you a lifetime. If you don't go to the dentist, I guess you're going to be talking like you're crazy. But again, you're going to need to get a checkup. And the same thing goes with life insurance. You should be getting a checkup. And I subscribe that you really need to do it based on what's happening today. Now, years ago, I'd say annually. But looking at today, I'd say every 6 months. Things happen. People leave jobs. The kids come back. We don't want them back. The parents come live with us. Things happen with our families internally, so forth. Now, again, having this review, I'll call it a review. The point is you need to have a review. And I think it's also something that goes back to say, well, I don't, what is it? I'd like to do it, but I don't know anything about life insurance. Well, you don't know anything about medicine, but yet and still you go to the doctor. You don't know anything about dentistry, but you go to the dentist. What makes you think you need to know something about life insurance? Or health insurance, which makes me think also, I guess I can get on another topic here, talk about health insurance. But again, let me finish this one up, because so many things happen to me when I'm talking to a client and I'm talking to you and things like that. And it makes me, the information is there. And I'm pulling it down. And so you need to, I would subscribe that you please consider looking at your program. This happened within the last 30 days. This is end of June. It was in the end of May. And I might even said something on podcasts about this. But a lady makes an appointment with me, a client, and she comes in from another city, and no problem with that. I thought it was kind of interesting for her to come in, and she wasn't even a client. It was a referral, and I said, there are people like me in your town. Well, I'll just say now it's Durham. I said, there are people in Durham that do it. Well, no one does it like you. I said, well, I agree with you on that. But you didn't have to come this far. We could, will you do Zoom? And I said, well, I'm an old guy and I don't know how to fly, but I'll make an effort with you. But she was here sitting in front of me at the table, and sure enough, she brings in, she said, I've got my information with me. And I saw it when it came in. The information must have been like this. I'm talking about 7 inches of information. And I said, Ms., I'll help you out, but I need time. I would like to spend some time with this information so that I can come back and make some type of recommendation to you, whether it be good, bad, or indifferent. Well, that's why I brought it. I want you to look at it and tell me if it's good. Well, that's a tall task. If you bought it, it must be good. I have confidence in you. And anyway, I looked at it that night, and guess what? Most of it was bad. But that's another story. I'll get into that later. So someone caught that. But no. But I did look at it, and there were some things that we needed to kind of curb or whatever. Well, she had some policies in there that were that would only, she needed to stop paying on them because she was approaching the age that they needed to be. But I don't even know if she was going to be aware of that. But anyway, that's some things. But my whole point here is that you need to look at your information. You need to take a look at it at least once a year, but I am suggesting twice a year just to see how things are, but at least once a year and see where you stand. And that may help you devise another plan, if you will. When I say another plan, a plan that's going to assist you accumulate more dollars to help you for the retirement segment of your life. So those are some things that we should be looking at, because there is going to come a time when you're going to want to start drawing those funds out, if you will, if you have any type of annuities or some type of funds and that sort of thing. So look at those things for yourself and please consider that and go from there. With that being said, I don't know if I've had enough time or what have you. I think the last time production said I spoke for about 35 minutes or something like that. Was that it? Mm-hmm. Yeah. And with that being said, did I do it this time?
Yeah, 40 minutes.
I did 40 minutes. Okay. That means if I did 40 minutes, there was only 5 minutes of any valuable stuff. So I'll just ferret that out and play it several times. Okay. Again, thanks for tuning in. Send those questions in. I will try to address them as best I can. And that's how I got on this long-term care thing. Someone asked me about that. And I didn't know I was going to say that much about it. But again, I think it was a valuable thing to hear, if you will, because there's so many things that come up with long-term care, and we can get confused about that. Especially with that one statement, I don't want to go into a long-term facility, or I don't want to go into a facility. Well, I kind of debunked that, because you don't have to go into a facility with a long-term care policy, not unless you purchase it specifically for that. But again, it's a matter of devising and getting a plan that's structured for you. Awfully important. And with the event of what happened with COVID, everyone goes back to COVID. And companies have made some changes post-COVID. And so you need to be asking yourself, do I have the right kind of policy that will take me to the next level? I'm not saying what you have is not going to work, but they have upgraded some things in their portfolio that you may want to consider. Most companies will do a 1035 exchange. Forget about the terminology. In other words, what it is, you exchange this policy for another policy, and you just keep on stepping. And some companies, there's a charge for that. Sometimes some companies don't make a charge. But you can do an exchange that would cost you, in some cases, zero. In some cases, it may cost you. But again, that would mean you would get a new policy that would fit you. Now, I don't think that you're going to get a new policy that's going to fit you. It's not going to cost you nothing. I don't want to give you that impression. But again, it may be the best thing for you. You never know. And you never know until you ask. And let's face it, you can always say no. You can always say no. So anyway, in fact, I can tell when a person's going to say no. And that's the case when I can see it, and then I get up immediately. I say, I'll see you later. I got something I got to do. And they've already got the no, because they got the no from me, because I know it's not going to happen. No. Take care. Again,